Imagine this, you're filing taxes next year, and suddenly you qualify for deductions you never expected, saving thousands. Or you realize the benefits you counted on gone. This isn't some distant policy debate, it's happening right now. President Trump's newest tax bill is shaking up the system for nearly every American: parents, workers, retirees, and homeowners. So, are you one of the winners? Or will you be paying more without even knowing it? Comment below. Do you feel taxes are too high, too low, or just plain confusing? Let's see what people really think. Stick around, because by the end of this video, you'll know exactly how these changes could impact your wallet in 2025 and beyond. And hey, if you find this helpful, hit subscribe so you don't miss future updates. 1. The tax cuts are now locked in. Let's start with the big headline. Trump just made the 2017 tax cuts permanent. That's right. Those lower tax rates, from 10% to 37%, are here to stay. Plus, the standard deduction remains high and keeps rising with inflation. In 2025, it's $15,750 for singles, $31,500 for married couples filing jointly, but personal exemptions. But beware, this drops back to $10,000 after 2029 unless Congress extends it. If you've got a big family, this could sting. This could mean thousands back for hospitality, retail, and shift workers. High-tax state residents, heads up. The SALT deduction, after years of caps, just got juiced up. But you need a valid Social Security number to claim it now. They get a $1,000 starter deposit into a new Trump baby account. You can save $5,000 per year tax deferred for their education or first home. Now, you can deduct up to $40,000 in state and local taxes if you earn under $500,000, 4 times more than before. Drop your take in the comments. Are you in a high-tax state? Let me know in the comments. For workers clocking in overtime or relying on tips, finally, some love. Use it while you can. Small business owners with qualified business income. A guaranteed $400 deduction if actively participating. 1. You can now deduct up to $25,000 in tips. 2. Overtime wages. Deduct up to $12,500, double for couples. Gone. And yes, you don't need to itemize to claim these. Just take the standard deduction and still benefit. Will you personally benefit from these changes? I'm really curious. Let's get a real-world take in the comments. But heads up, this only lasts until 2028. If you raise 65 and up, there as a fresh $6,000 senior deduction on top of your regular break. Great news for those on fixed incomes. Though, if you earn over $75,000 individually, it phases out and disappears entirely after 2028. Short-term boost or lasting benefit, you decide. Parents, listen up. Child tax credit bumps to $200 per child, plus inflation adjustments, and babies born from 2025 to 2028. A big help or just a gimmick? Middle class gets some extra goodies. 1. Car loan interest up to $10,000 deductible on U.S.-made vehicles. 2. Dependent care benefits increased, but some cuts too. Moving expenses and bicycle commuter benefits. This bill slashes taxes for working families, seniors, and overtime workers, but critics say it could explode the national deficit and cuts programs elsewhere. Is this a long overdue reset or a ticking time bomb? What do you think? And hey, if you found this breakdown useful, give it a like, hit subscribe, and stay tuned for our upcoming deep dive into hidden loopholes in the new tax code. Thanks for watching, and I'll see you in the next one.